human beings have the ability to take concepts that don't exist in the physical world and actually create and build them. If you just think about, obviously, the concept of money, we just sort of made that up. And you can do that with so many things, including economics. A lot of the strategies in public markets that are kind of called climate, Microsoft, Apple, just because they're committing to net zero doesn't necessarily mean that they're contributing to the lowering of emissions.
Hello, everybody, and welcome to StuffTV. I'm your host, Nick Huzar. I'm also the co-founder of OfferUp, and I think as anyone that's watched any of my content before, you know I've been on this personal journey to try to understand my own existence and how I impact the planet. And it's kind of a complex topic, but I figured one of the things I could do is interview really interesting thought leaders to help kind of enlighten us and share some interesting information. And today I'm excited to have Heather Beatty with Scope 4 Capital. She's the founder of this organization and investment group. And, Heather, thank you for being here. And I'd love to just maybe hand it over to you just to learn a little bit more about your background and, what does your company focus on?
Yeah, thanks so much for having me. It's a pleasure to be on. So a little bit about me. I'll tell you a little bit, maybe both professionally and personally. So I've been in the what's called institutional investment industry for almost 20 years. And so Scope 4 Capital specifically focuses on public companies that are scaling climate solutions. But that's not where I started. I'm an avid reader. And a lot of my readings kind of got me on this path, this climate path, if you want. I'm also a pretty avid traveler. I love traveling all over the world to emerging countries and developed countries. And I don't know if you've ever read the book Sapiens. Have you ever read by Yuval Harari?
Oh, it's one of my favorites. I have it over here.
Yes, it's one of my favorites too. So kind of gets you thinking about how, what's history about, where are we going? I've actually read all three of his books, and I like Homo Deus better.
Really? I tapped out on that one.
Oh, okay. Did you read the last one?
I didn't know he had a third, but I loved the story arc of humanity and Sapiens. It's just how everything built on how we've come to be where we are today and how it just shows you kind of the layering effects of that story. I just thought was really well done.
Yeah, I recommend it to anyone and everyone. I literally just sent it out like every single Christmas for years. And but it does get you thinking about, again, where are we going? And what I love about it is that human beings have the ability to take concepts that don't exist in, the physical world and actually create and build them. If you just think about, obviously, the concept of money, we just sort of made that up. And you can do that with so many things, including economics. And I also read a book that you'd probably like a lot called Garbology, which is all about the history of waste, and read The Sixth Extinction, which is an amazing book as well. And so just kind of got going down a path and, all the while traveling to places like Cambodia, where I really saw the result of a lot of the consumerism that we have here today, just thinking that it was going to be a lot of nature and ended up seeing a lot of, again, kind of waste in the waterways and the killing of biodiversity. And then on the investment side, a lot of clients about 5 years ago started asking us about how we think about climate risk and how we're thinking about it potentially as an opportunity through climate solutions. And in talking to a lot of our investment peers and looking at a lot of the strategies, particularly in public markets, I really felt like there weren't a lot of options out there. And a lot of the strategies in public markets that are kind of called climate are really, they end up just being kind of technology strategies in disguise with a wrapper on them. Microsoft, Apple, just because they're committing to net zero doesn't necessarily mean that they're contributing to the lowering of emissions. And so one other book that I read and who we have a relationship with at Scope 4 is called Project Drawdown. Are you familiar with that?
I've not read the book, but I've heard of it.
Yeah, so it's an amazing 501c3, and it's all about the top 100 climate solutions that, if scaled globally, would actually solve the problem of climate change, which I would highly recommend. And happy to introduce you to the executive director, Jonathan Foley. But I was thinking to myself, well, why aren't we investing that way today? If we can actually solve this problem, why don't we start by investing in the solution rather than, arguing about how to calculate emissions? I think we sometimes let verification and quantification get in the way of, and perfection really get in the way of moving forward in progress. So
yeah, that's really fascinating. A bunch of things you touched on were interesting. So I'm going to be in Cambodia, by the way, at the end of the year.
Oh, okay.
I'm doing a big tour with my family. We're going to Vietnam and a bunch of places. So I'm hoping to explore some of what you see. Part of the trip is, adventure, but we also want to understand sustainability and how others are doing it. And sometimes you have to see it, firsthand to really feel it. In the U.S., one of the things I always think about, especially with waste, is you just don't, it's out of sight, out of mind all the time. But you think about the magnitude of waste, and then think about the
Yes.
magnitude of the value that's still just getting just thrown out. And
Yes.
it just kind of baffling to quantify. Like, in the U.S., we will produce on average about 128,000 pounds of trash in our lifetime. I actually sat in a pile of if you go to StuffTV.org, you can see it. I laid in a pile of trash, and then we kind of photoshopped it so you could see what it looked like over the course of a year, just my family's. And it's kind of hard to think about. And I think you kind of, there's a reason that the trash sites are not out in the public. They're always hidden.
Yes.
You have to go find them, right? Like, I don't think they want you to see what it actually looks like.
Well, I'm sure you're familiar with, the term climate justice, and a lot of times places like landfills are put in underrepresented communities that can't defend themselves. And so a lot of that pollution and the smell ends up, being in places that, most people can't see, but it's still affecting groups of people.
Yeah.
I don't know if you ever saw the movie. It's a Brazilian film about an artist who created art out of trash. Did you ever
No.
see that?
No.
It's excellent. I'll send it to you after this.
So backing up, so you spent a lot of time on this, saw it firsthand, and we're kind of passionate about this space. And then, I mean, is your background in venture and investing,
In
or
adventure?
no, not adventure, venture. So venture
Business and
investing.
adventure and venture.
Yeah.
I do have a history in institutional investing. And I actually, the last company I was at, I launched their climate council, but it was always very traditional investing.
Yeah.
And so, I've definitely seen the arc of investing going from what's called SRI. So that's just socially responsible investing, where generally you're divesting away from certain things, like there was Sudan Free, or I'm divesting from tobacco. And then, the art of ESG, which has gotten a ton of backlash, which of course we can talk about if you want to. It's created a lot of political, mismatches. And then, to me, investing in ESG, investing in climate aren't quite the same. And I think oftentimes people confuse the two or aren't sure. And I think there's just a lot of misinformation out there in general. And so part of what it is that we do is also really educate investors about what we mean when we say we're investing in climate solutions. It's like, I don't even know what that means. Are we talking about renewable energy? And the answer is yes, but it's not just about renewable energy. What we're really focused on are products and services that are lowering emissions. And so it could be something as benign as LED lighting or insulation, or, building retrofittings is something that we're really focused on right now. And also grid infrastructure. So we can have a ton of renewable energy, but if we can't plug it into the grid, then we're not going to actually be able to use that renewable energy. And so we actually invest in 6 different themes, but it isn't venture. It's public companies. So public equities. And I think that I talk a lot about the climate continuum. There are all kinds of different ways to invest in different climate solutions based on what your risk reward framework is and what you want to invest in. So venture might be more about, prototypes and technologies that haven't yet come to market, which I think is super important. But if we're kind of in a rush, so a lot of these public companies already have these goods and services that they can scale globally. And that's the name of the game right now is, do we have what we need to actually scale? And so that's kind of the other side of it.
That makes sense. I like the idea of double clicking on ESG. My understanding, a lot of this, I've seen the backlash, and I think Blackstone usually gets a bad rap of like, oh, you packaged all this up. I've heard a lot of this of like, what is your view? Like BlackRock. Yeah. So I think like, do you think that's a fair statement, or like, what is your view on it, and maybe just elaborate on what it means?
So honestly, I think everyone actually now has a different definition of what ESG means. To me, it's a framework and that you can apply to any investment strategy. And that does actually have applicable risk. And so that's how we think about it. E is environmental, S is social, and G is governance. And it's all about what each one of these companies are doing within their organizations to focus on that. So yeah, that's basically what it is. I think the backlash and what happened is that a lot of investment companies probably said, okay, clients are asking us about ESG. It's not something that we've ever incorporated into the investment process before. What exactly is that we have to do? What's the bare minimum that we may have to do this? I think that's a little bit of what happened, is that there was kind of a lot of bare minimum going on. I think there was a lot of marketing, and it turned into a bit of a marketing exercise. And then I think a lot of investors are like, wait a second, now I'm going to pay you more and you're going to put an ESG label on it and it's going to look just like any regular portfolio. I think that's also where the backlash came from. I also think that because there are so many metrics and companies disclose in so many different ways, you've got companies like Sustainalytics and MSCI who both have ESG scores scoring in totally different ways. There is no real baseline. And so my opinion is that we need to maybe remove the E, the S, and the G because it's really challenging to have all three in any one company. And if all you're doing is saying, okay, this company does the best within that, what ends up happening is you do invest in a lot of tech companies. But at the end of the day, it's not clear whether or not we're actually facilitating change. It's just a lot more reporting and sustainability reports, so on and so forth. And are we actually facilitating change in this direction? I'm not necessarily convinced that we are.
Yeah, I think I feel the same on this and talk to a lot of people, about this exact topic, which is, oh, my company has XYZ ambitions to be carbon neutral, or you name the metric, by 2030, whatever the magic date is. And then you start to peel the onion and go, that it's just based on hope. Like what's the real strategy? What's the next milestone next year? How are you going to get there? And then it just kind of falls apart. And so I think I acknowledge that this is a complicated topic. At the same time, I harp a lot on measurement, and I talk a lot about credit scores and nutrition labels. So, it wasn't until the 50s or maybe, we had credit scores. And then people started to actually pay attention, right? It wasn't until the 90s that the government got involved and said, we have to have nutrition labels on everything. And so we started caring about calories. So I don't know about you, when I was a kid, no one drank water. We drank Capri Suns and Coke, right? And then we started caring about calories. So guess what? Yeah. All these new, foods came out, low fat, Coke Zero, all these things. So I just feel like we're in an era now where we need to have some kind of standard. And I acknowledge it's complex, but we need to look at the end to end from manufacturing, transportation, waste, reuse. You could look at bikes on OfferUp, for example. My kids have had, most of their bikes are all from OfferUp, and then I sell them again on there. So some of these bikes have had 3 different people owning them. Right? So that's the use case of the bike that's good. So I don't know. I acknowledge it's hard. I think some company needs to really think about that. And then ideally, just like a nutrition label, on every product you buy, there's a carbon score. And then you can go and learn more about it, and you can decide, do you want to buy more of that same product, or maybe there's other ones so I don't know. That's my hope sometime, because I feel like unless we have something like that, I feel like we're just I don't think anyone's going to be really held to some accountability. We're just going to flap around for a while. And I feel like there's just, I just feel like we're a lot of companies are just there's a lot of hope, and, hope is not a strategy. And so.
Yeah. No, I agree with you. I think you're talking a little bit about supply chain transparency, which we don't have a lot of, especially in public companies. I do agree with you that there isn't a lot of standardization. Although that's getting better, I would say standardization is definitely getting better. In some countries, it's even better than in the United States, particularly in Europe. And then there's also a lack of verification. So, if you talk about scope 1, 2, and 3, and scope 3 is kind of a whole nother topic that we can talk about if you want to, but there's a pretty standard way to calculate scope 1 and 2 emissions. But at the same time, a lot of these companies aren't necessarily verifying. And so I've talked to a couple of verifiers where they come into companies and they verify their emissions, and it's all over the place. And so they redo it and it looks really different. And so, yes, measurement's really important, but are we measuring the right thing?
Yeah.
And where are we going? I think that's what also happened a lot is, a lot of maybe asset managers and companies said, what do I need to sign? I'll just sign that. I think that's why BlackRock backed away from a lot of things that they agreed to do, is because they didn't think through what it would actually require to execute on what they had promised. And I think that's what's going to happen with a lot of these companies that have committed to net zero. Almost 5,000 public companies now have committed, and it's going to require some work. It's actually just a complete transformation of infrastructure and supply chain to get to where they want to go. And I know some companies are using cute ways to go about doing it, like with carbon offsets, but I think to truly address the issue, you're going to have to think about building efficiency, obviously, is one thing. Think about renewables. And there are just a variety of different ways to go about doing it. Think about, obviously, water use and sort of thing as well. So that's more sustainability, but it's kind of all interlinked.
I do think that's I'd be curious your views on this, because I think that's part of the challenge, especially in public markets. Everyone pays attention to earnings. Everyone's looking at P&Ls and top line growth and whatever metric that matters. But ideally, there's also an element of some kind of reporting around this metric that they're held accountable for. I think the challenge, of course, is when you're running a business and you've got so much pressure to deliver on quarterly results.
Yes.
I feel like this is always something that just kind of, it's always the back burner because it's hard to justify the ROI. You're putting a bunch of effort into this and you say, well, it's good for the planet. Well, yeah, we got earnings next week, so this isn't going to be the top thing. That said, goes back to kind of transparency. My hope is consumers start to understand a little bit more about what's out there, and they start to create more pressure and hold companies more accountable with their pocketbook and say, hey, I used to like that thing, but man, it's terrible for the environment. And so I think there'll be some cases that make sense. And clearly, if sustainability, I always say if it takes more time or it's more expensive, most people are just not going to do it.
I agree with you. Yeah.
Yeah.
It's about convenience, definitely in the United States. I think it's also about culture and what are we focused on and how are we being raised. And then for companies, it's all about the cost of capital. So that's why more recently, a lot of renewable companies have not done well from an earnings perspective is obviously interest rates have gone up and there's been a ton of inflation. And so cost of capital for companies just in general are going up. And a lot of these projects have a ton of capital expenditures on the front end. And so, that's I think, going to be a short-term headwind. Obviously, the huge tailwind in the United States particularly is the Inflation Reduction Act. But I also think politically things are rolled back and pushed forward based on who's in play, who's in power, and there's a lot of uncertainty as to what's going to happen next year. And so I think a lot of investors are kind of holding their breath a little bit in wait and see mode with all of these headwinds coming up. Are these tailwinds going to be able to maybe in the short or medium term override that?
Yeah, for sure. Maybe double clicking a little bit on the areas that you're interested in. Like I talk a lot about energy because I do feel like it would be great I just think it'd be great to harness the sun a lot more. Right. And I know there's a ton of investments in solar, battery tech. I mean, if you look at the cost per kilowatt hour, it continues to drive down. Like, I'm very bullish on that in the long run. At the same time, we have a very weak grid in the U.S. But I'm curious, I know that's an area that you spend time on. Maybe just elaborate more on what you find interesting or challenges you see there.
I think the benefit of investing in public markets is that you can rotate into a variety of different themes that you're interested in and kind of underweight other themes. So just in general, we've actually been pretty underweight in residential solar, just particularly in the United States. There's just been a ton of debt on the balance sheets of a lot of these companies. I agree with you that over the long term, it's an amazing investment, but we've been pretty underweight there just because valuations were stretched after the IRA. And so now we're actually dipping our toe into it, and you see a lot of oversupply in the panels out of China. So what we're more focused on right now is grid infrastructure. We talked a little bit about that. Battery storage, 100%. I feel like there's a lot of hype in hydrogen, and I would argue that it's not necessarily economically viable right now. And so there's obviously green, blue, and gray hydrogen, and to focus on the green and the applicability there, it's going to be tough to really scale that in a meaningful way without subsidies, even though the United States is pretty focused on that. So we invest more in the electrolyzers or the picks and shovels. So what's kind of underlying that? If you think about, even with EV or fleet EV, we invest in some of the car parts, if you will. So we're not necessarily always making a play on, okay, we think Tesla's going to do really well and some of these other companies are not. So it's more kind of what's the underbelly that's going to allow each one of these components to get there. We also think very globally. So we're actually pretty underweight relative to our benchmark, which is the MSCI Country World to the United States. And we have a pretty big exposure actually to Japan, which I think is kind of a sleeping giant, if you will, as it relates to climate. So they have a net zero by 2050 target, and they're very focused on a variety of different things, including train electrification. So that is something that we're invested as an example. And also they're doing a ton of building retrofittings. And so one of our companies is kind of focused on scaling that within Japan. I think it's important to think about what's a tailwind in each one of these countries. How is policy helping or hurting this cause so that we can actually be implementing these things? So obviously Europe is very focused on different, mechanisms and triggers than the United States, and same with Japan. And I mean, I don't know if you've talked about China at all in any of your podcasts, but they're actually the largest contributor to renewable energy globally. If you add up every other investor by country together, China meets that. But they also are investing in coal, right?
Yes,
So
they're
they're just
amazing.
investing whatever they can invest in so that they can meet the energy demand, but they also are investing in renewables. So it's sort of a,
It's yeah. And often I always say China gets a bad rap, and especially sometimes when you talk to people, they get frustrated and say, "Oh, I don't know how I can make an impact," or "It's China's problem." And I always argue, "Where do you think everything comes from? Go look in your house. That thing you bought, where did it come from?"
well, right.
So we're all in this together, unfortunately, in the world. And there's a really good visual I like that I think NASA does a poor job of marketing themselves. So if you go to their website, you can actually see like CO2 over the course of a year. Like it shows you seasonality. They explain this. There's a really interesting scientist that used to show that. And you just see that we're all in this together. Right? You just see this like it's like we're one big marble. Right. And it's all, the air flows wherever air wants to flow and trash moves around wherever it wants to move. Like it's not,
Yeah.
And again, globalization happened long ago. So, I think the challenge, kind of like you were saying, is different countries are on different paces to do things. I think Europe is really way ahead of where the U.S. is. Like it just seems like you've got government and business and consumers all aligned, and they're just moving. Like Norway, Sweden, like they're going. And it feels like in the U.S., maybe it's kind of like you said, maybe it's who depends on who's in office, right? I feel like here the government is a little bit more not as aggressive, and also I think consumers. And it's, again, part of the reason I even spend time on a podcast is I just think it is a complex problem, but most people kind of scratch their head and go, okay, what can I really do? I don't get it.
Yes. I mean, part of the reason I launched Scope 4 is to give people agency because it does feel like an overwhelming problem. How are we voting with our dollars? I'm sure that's part of the reason why you launched OfferUp. Same thing. It's how are people voting with their dollars? How are they voting with their actions? And are there easy ways to go about doing that? I felt a sense of disappointment and sadness, and so that is partly why I launched Scope 4, is that there needs to be investment in a massive scale that's being pushed towards the actual solution, towards mitigation and adaptation. And obviously there also just needs to be policy and regulation that helps rather than hurts, either through a carrot or a stick, because I think that when policy is helping, then it helps move investment in the right direction rather than the other way around. Yeah. Although, what also just ends up happening is companies end up just moving to where there's lower regulation if they don't like what's going on.
Yeah.
And that's part of the reason, kind of to your point, globalization, it just is, right? It's like, okay, well, if this country is going to regulate me, then I'm just going to go somewhere else. And so, we sort of, as a globe, that's why the COPs supposedly are there, is so that we can all agree to what's going to be regulated. I'm sure you're also aware that we were shipping all of our plastic to a lot of the Asian countries, particularly China, and then China said, okay, no more.
No more. Well, they had a growing middle class. They were producing enough of their own.
We're not doing this anymore. Yeah.
One of the places we're going on our family trip is Africa. And Africa recently announced a ban on new plastics because they have it just floating around everywhere. And so my wife and I actually already packing for our trip because we're leaving here soon. And normally we wrap a lot of our stuff in our bags in plastic. And she's like, at the airport, they'll if they look through that, they're just going to take all that out. I'm like, well, good for them, right? And so I harp a lot on plastics because I think the history of plastics has been wonderful, but it's also been really devastating. Like if you look at, I always tell people, just use reusable water bottles and use reusable shopping bags, and you'd eliminate 25% of the plastics in our oceans. I feel like that's another good innovation for our time, would be create a plastic that biodegrades way faster.
Mm-hmm. Yeah, I think that's happening right now. That is happening. Biopolymers are happening. It's just, I think, at a lower scale. And then there's, of course, microplastics. Microplastics are not known as a toxin. It's not acknowledged as a toxin from a regulatory standpoint. And so it's going to continue to permeate in our airways and our waterways until I think we acknowledge it as a toxin. Because right now it's not being regulated by anything.
Well, and of course we eat that, right? We're all eating that and we don't know that.
Mm-hmm. Plastic tastes so good.
Oh, yeah.
Yeah.
So energy infrastructure, what other areas do you find, if you think about public markets, are there companies that you think are really paving the way and setting the right tone in the public markets that people should be aware of?
Maybe it'd be helpful if we took a step back. So I can just talk about the 6 themes that we invest in. I tried to look holistically at all of the potential climate solutions that could lower emissions. And what we look at when you talk about measurement is we look at what we call emission reduction potential. And so the 6 themes are, the circular economy is very much one of them. So reducing food waste is a huge thing. There are 25% of our landfills are made up of food waste and metal recycling, for example. So one of the companies in our portfolio is called Radiant, and it's a metals recycler, which I think is really important when you think about commodities and all of the metals that we need to really fuel the energy transition and kind of where they are today. Lithium obviously is a huge topic, and how that's being regulated and how that's being mined. Same thing if you think about nuclear, uranium is a huge deal. And right now, a large percentage of uranium is actually in Kazakhstan, which is controlled by Russia. And so it's important, not just from a waste perspective, but just from a, like, how are we going to be able to get all of these metals to be able to continue to fuel this transition? So we think that metals recycling is a huge deal. We also have a theme we call clean tech, or it's basically climate technology. And so energy storage is a huge piece. Building automation systems is a huge piece. There's a company called Asbill out of Japan, which I had just referenced. We call another theme the discretionary consumer. And so that is like EV. It's, again, how do people vote with their dollars, or plant-rich diets? We actually, just from a valuation standpoint, don't have a ton of like Beyond Meats in our portfolio because we do care about whether or not the company has a financial flexibility to be able to move through each one of these cycles. And so a lot of the companies that we're investing in are actually transitioning from maybe being one thing or another to being more of a climate solutions player. Like ABB, for example, is in the portfolio, and it has about 97% of its revenues tied to grid flexibility and everything that goes along with that. Another company in the portfolio, Hitachi, which most do not think of at all. It's more of like an industrial conglomerate. Yeah. They actually changed their CEO a few years back. They're putting a ton of R&D towards climate solutions and things like wind blade recycling. They have a super small part of their business doing drone afforestation. And so a lot of these companies are just not necessarily known as sort of pure play climate solutions companies. And we think that's part of where their value is coming from. And then I'll just tell you the other three. Green infrastructure, renewable energy, and sustainable ecosystems are the other three. And that's all about, when I talk about green infrastructure, alternative cement, for example, and just more durable steel and more energy efficiency in all of these systems. Manufacturing contributes a ton to CO2. And there are so many different technologies that we could be implementing in each one of these processes to actually lower emissions. And it's an easier way to go about doing it. Yeah.
Oh, yeah. You touched on, by the way, when you talked about 7 episodes I've done already. Like I've done concrete. I've done I've had, Republic Services, big waste management company. I've done recycled batteries, hydrogen. I've done a bunch of these that I think, again, are fascinating. And, sometimes a lot of these you just don't think, like, the concrete, for example, it's the same mix we've had since pretty much the invention of it. But how do you think about, I always think about feedstock in our waste stream. And so, I did a company on AI recycling robots that was on here. And like, if you can get more efficient and isolate value in the waste stream and have, at least a decent ROI to now reutilize that, now you're taking that waste stream and you're potentially feeding it into something else. So I talk a lot about, like there's this big climate umbrella. But I talk a lot about like the circular economy because it is very local, in my opinion. So manufacturing is typically done with the globe in mind or a country in mind, but waste management is very fragmented. Like how I deal with waste here in Bellevue, Washington versus Seattle is very different. And so I think that makes it a big challenge. But again, part of the reason, going back to something you said earlier about just, the early days of like OfferUp, why I started this company actually had nothing to do with classifieds. It had to do with value I saw growing in urban and suburban areas all around the country. And so I'm looking at, it took me like 5 months before I was convinced to do this. And I was like, this is crazy. I said, our homes are getting so much bigger. We're running, our buildings are getting bigger. We're running more storage units. I'm like, why is this all happening? Is it just because of population? No. In fact, our homes, we're having less kids than we've ever had. Our homes are now, on a square footage basis, more of a glorified storage unit. Like a quarter of U.S. households with 2-car garages can't park in their garages anymore. When I looked at the smartphone, I said, well, I think it's because of friction, right? It's all time value. We don't have the time. We don't deal with it. But I said, the smartphone, if we could just take pictures of things, maybe this would be something that actually starts to unlock some of that value. And luckily we were right, because the alternative before was I had to take a picture of something, tether it to a desktop or a laptop and post it. So the smartphone really helped us to remove a bunch of friction in that local experience. But I still think it happens. Like, where's all the Amazon stuff go? Like, it's just growing in our urban area. Like, it's just sitting in houses and sitting in these areas. So same thing with our waste stream. Like, it's just all just, hopefully now we have a lot more data and we have motivation and capital going into circularity where we can start to unpack these things. But I think that is just the challenge of a globalized world now with, I think we're on track in the next few years to do like 250 billion parcels a year and being shipped around the world. That becomes challenging when you have to now try to figure out how to deal with all that on a local level.
I mean, efficient aviation and efficient shipping is another two of our climate solutions. It's pretty major, right? When you think about, I actually spoke recently to a group and just talked about fashion and sustainability. And a lot of people obviously are aware of fast fashion, but they're not thinking about, again, back to supply chain transparency, about 8% of the world's CO2 comes from fashion. And it's because you start with wherever, let's just say it's cotton. If it's not organic cotton, then there's going to be a ton of pesticides that go into the water that go really erode the soil. And then that cotton is obviously turned into fabric, and then it's shipped all over the world and flown all over the world to get to where you're actually physically wearing it. And then people now only wear their clothes, I think an average of 5 to 7 times in the United States before throwing it away. And then about 5% of the landfills are filled with fabrics. But people aren't really thinking about that kind of, what level of water and energy did it take for me to put my dress on today? A lot. I've
also done a few of these on fashion, by the way, and it blew my mind how much water it takes to make a t-shirt. I won't quote it because I forgot the exact number, but it's big. And the other one too is if it's cotton, great. But that's not what's in a lot of, if there's polyester in things. So there's another company I interviewed that's actually spent a decade trying to figure out how to isolate, cotton, extract polyester out of that to try to free that up. But clothing, like you said, is a massive impact on just, clothing humans and then the waste associated with that.
Yeah, I think kind of going back to how human beings are pretty selfish, part also of what Scope 4 is about is saying this is also a risk, but it's a huge opportunity. And so the more that we're investing in this, we're actually going to earn a strong return on our capital, investing in renewables, investing all of these things. This is an literally unprecedented time, and there need to be trillions of dollars that get put to work to meet our goals. And that's actually going to be a contributor to GDP to the tune of about 3% per year. And so there will be winners and losers, right? On one side of it, it's a cost. On the other side, it's a return. It's an investment return. And so actually investing in the picks and shovels end up, being a benefit to the investor. And so I think it's the changing of the mindset as well into, okay, this is actually a potential return on my capital rather than, this is a cost or even this is a value. Some people agree this is or is not a value. We can just sort of extract that too. It doesn't have to be a value for you to invest in it because the train's moving. And so you can either sort of miss out on that return or have it in your portfolio. And I think that's basically the wave of the future, in my opinion. That's where the investment world is going.
Yeah. I like what you said too about investing in the picks and shovels. So, on the underbelly, if Tesla wins or doesn't win, doesn't matter. But enabling that, or lithium. I've also done a podcast with a company called EnergyX, and they're a lithium mining company to try to make lithium mining more efficient. And so I think there's a lot of that stuff that you don't have to get the individual company right, but I mean, if you invest kind of in that space more broadly, I think you're going to have a lot of big winners. Well, I know we're kind of over on time, but I really appreciate you for spending some time with me and talking about this topic. And it's just very clearly a complicated space, but I'm excited by the areas you're investing in. It makes a lot of sense to me.
I really appreciate it. Thanks for having me on, Nick, and have the best time on your trip. I can't wait to see how it goes.
I will do. I'll take some videos. Thanks again.
Thanks.